What's up, guys? Dakota back with another video, another weekly trading review. In these videos, I go ahead and review my trading for the week, trade by trade. The reason I'll go ahead and upload these because I wish I found someone that showed the process when I first got involved in trading, so I can understand what can I do to actually improve, right? Actually see it. Let's go ahead and get into it. So it's the weekly, the week that we're going through is 2022, July 10th through the 15th, and it was kind of a rough week. I give it a grade C plus. Um, it's not that great. Clearly, I just got straight losers, but I was able to cut losses really short this week. I had six losers, and I only ended up with 3.7 R, which is really good. Considering like this week, considering my max loss is minus 4R, I wasn't really prioritizing the minus 4R as I was taking those trades. But I knew, like, at this point, this is where I'm going to cut it on some of them. Some of them I just exited early due to fear. But a lot of them ended up hitting SL anyway, which we'll break down. So kind of complicated in that sense, we'll say. So this week the priority was to keep my limit orders in if I planned them. I did well as I only canceled one limit order on AUD USD. I made quite a few mistakes and ended up with 77% efficiency. After review, I realized I should prioritize placing my stops in better positions. So for the next 2 weeks, my priority is to place my stops clear out of the way of my entry. My stops should be out of the danger zone of each position. They need to be able to give the position a chance to succeed, right? So like I talked about previously, like I talked about before, is that I had an issue with setting my stops really tight because I'm used to higher R opportunities. Um, let's say I've practiced high R opportunities for more years than I've practiced low R opportunities as I'm going for now, and just trying to get in, get out real quick. Well, yeah, just trying to take advantage of the rally instead of taking advantage of a full swing opportunity, right? Um, so with that, to compensate for the lower R, I've been setting my stops tighter where I can, but sometimes it's unreasonable for what the market is actually showing. Right, sometimes I actually do need to get a wider stop on the positions, and that's what I'm working on. And I've already been working on it for the past 2 weeks. Again, this is being recorded actually at the end of July, so actually made some really good progress with that, which hopefully that will show in the next weekly reviews. So let's continue reading. Also, efficiency, if anyone's wondering what that is, that's just the wow, the rate at which you follow your rules, right? So you can track that. I got a little cut trade happy to minimize my losses. Most of the cuts I'm proud of, but I know some I did because I didn't want to have a terrible P&L at the end of the week. Again, regularly focused on P&L. I've noticed, and without intentionally like doing these type of reviews, I wouldn't say that I'd focus on P&L. And anytime I do focus on P&L, I try to think about am I taking the trade properly? But when I'm noticing that I'm focusing on P&L and I'm looking at my P&L, I go ahead hide it, or I walk away from the screen. Like I'll go to the gym again if I'm focusing on P&L, or as far as reading doesn't get my mind off of it. I used to like read to get my mind off of it. Right now I study certain trading videos, trading content, and if that trading content is I wouldn't say I've gone to trading content in a book for the last 3-4 weeks to get my mind off P&L. But like, yeah, but yeah, mostly studying videos or restudying content that I've already studied from a certain course, or certain firms that I study, right? And I will say, like, this happened recently where I was extremely focused on P&L, um, because I have a certain 6 hour goal, and really because, to be honest, because I got funded the 200K. Um, at my risk percentage, hitting that would allow me to cover the rest of my expenses for the year, and I want to place myself in that position so that I can complete, like, just shift my focus completely to trading, and just have my bills paid out in advance, so I'm not focusing on that, right? Focusing on that and that type of stuff, right? So I'm not focusing on, oh, is this I have to be profitable by the end of the month or by the end of the week in order to let's say pay this bill, for example, right? I learned my lesson from that first year. I tried to do that, and I wasn't even like, uh, I wasn't as profitable as I am now. I was barely profitable that first year. Um, I had some outsized like returns, but looking back on it, it could have easily gone the other way. If I took one more loss, it could have easily gone the other way. Yeah. Um. But yeah, having that goal just kind of made me focus on that goal instead of on the process, right? Whereas before, I prioritized this goal, um, pretty much all year. I was focusing on, let me get this checked off for the day. Like, let me write up this report, this review, make sure I go back and study these trades, these charts, that type of thing. Like, just trying to improve my actual skill in trading, and not trying to improve my equity curve is what I want to say. But improving the skill, as a result of improving the skill, it improves the equity curve. Yeah, so I want to improve my skill of execution of the skill, execution of trading. So let's actually get into this. All right, let me stop talking. So Monday, this is just a review of Aussie dollar that we talked about in the last video, which, if you want to go ahead, check this review out. That's in the last video. Do a pretty good detailed job of breaking that down. This is when it actually closed on this Monday, on this day. Okay, the first trade taken for this week is Euro AUD. The idea was an inverse setup order. It was a limit order. Ended up as a manual entry. Whoa, let me slow down. Inverse setup, limit order activated. Ended up as a manual exit because price did not give the reaction I was looking for after activation. I like the cut because it minimized my loss, but I also need to know when I'm willing to give my trade drawdown tolerance, given that price did not reach daily level, my daily level that I was eyeing, and 1.5056 had not been broken to counter the downtrend. It would have been reasonable to give it drawdown tolerance. Alternate setup, original plan 5.22R, opportunity turns 2.62R. Right, so my original R on this trade was 5.2, and with the adjustment I made with the all setup, which we'll see in a second, it would have reduced to 2.6. The actual, if I exited with my actual early exit with this change, I would have lost, this is what I lost, minus 0.26R, and this is what I would have lost with this one. All right, with no management, with this change, instead of exiting early, I would have lost 1R of my original position, and I would have gained 2.62R. I can and will ask myself, is there an area near my stop that price could wick out before its turn? And that's what I've been doing for the last 2 weeks. I missed the quote. So that's what I've been doing for the last 2 weeks, just focusing on noticing where areas price could turn, and giving my market or my position an opportunity to turn in those areas. And keep me in the position. I would love for this. There we go. Nice. Okay. Let's go down to the screenshot. So weekly view, we just got to test the weekly time frame. We got a big bearish candle and basic JCP setup on the weekly time frame. So I'm looking for this to actually continue to scale down and potentially revisit this low. I like it to take out this low, to be honest. Obviously, initially, it's going to have to if we're going to continue down. And seeing that we got some reaction sitting right there, I'd like to see it continue to push down. That's the long-term picture. I don't remember if I actually ended up going for buy here. I believe this was a buy because I was looking at it decently. No, it was so. Okay, cool. All right, so inverse play off an hourly level. In that situation, it's kind of a weak level. Did I say it was grade 2? Do I have grade in here? Okay, so in the notes I don't have it graded. On my journal I have it graded. If I click anything, yeah. So in my journal I have it graded and everything. I'll have to transfer that over to here. So when I come to review it, I'm able to see. Something to note here, like we have this double bottom pattern again right before the pullback, but the thing is this is an inverse play, not necessarily a not a JCP play, right? Inverse play is just looking for this last low pre-breakout. Now the alternative setup is giving this trade more room to breathe, but with the same exact entry. And stop's going to be above this candle, which broke this level here, which let's go down to this one and see the breakdown. So I won't waste time and read all of this information, but just to break down real quickly, this is the change, right? And I drew out the zones to notice what levels that candle is breaking through, and that's what I'm basing my stop off of. The initial entry was just based off of the immediate break of that level that I'm entering at, and stop was just too tight in that situation. It was just below that level, and I could have gave it more room just putting it above this zone where price is likely to reject again. So this is the alternative view, and with this position, there was an opportunity to add. It was kind of it was actually here. It was kind of iffy for me. Like in that situation, I don't think I would actually add here in this situation, but it was an opportunity nonetheless. But so I didn't actually I didn't add it in the alternate like stats, but I just noted it down here because it was something that I noticed that I could have taken advantage of. But so the reason I drew this, what I identified as a inverted head and shoulders, we'll see in the next trade for this week. Okay, JCP long with W15 minute. This setup was a counter trend trade. Should not have been taken. As I broke down on the weekly, I saw like we were looking for bearish price movement. But after that loss that I took on Euro AUD, I changed my bias and I saw, oh look here, there's an inverted head and shoulders here. We could see price scale up a little bit more and see a deeper pullback before actually continuing down. So that's when my frame of mind changed, and that was based off of this hourly price movement, right? Price broke above this level, looking for a retest of this neckline and looking for price to push up. If the major trend says sells, I'll look for sales until the trend is invalidated. If I have no information in my plan at the moment that allows higher H1 time frame patterns to shift my bias. That's something that's important. I'm actually about to highlight that because that's not something that I immediately think of, right? Because if market structure is telling me to do something different, I'll do something different. But I don't have that. That's interesting. I don't have anything explicitly saying hourly level is able to shift my bias there, or I should be more explicit in that on the things that the hourly level, on what when the hourly level does this. This is when I shift my bias. In the case of taking a trade like this, the purpose of reviewing it is to figure out signals to exit this type of trade earlier, to avoid taking a full R loss, for a 1 R loss earlier. Reviewing winners to see how these levels are initially dealt with will give me more clarity. This is again the first trouble for FTAs, right? The first areas where I'm looking for trouble to happen or a potential rejection at. And again, just I need to apply more importance to those levels instead of just bypassing it, overlooking it, right? So we already talked about the weekly. This is the daily view of it. Oh, yeah, getting some sellers coming in that situation. Oh, which was right after, like just the following day, right? We got exhaustion here, which I didn't. Seems like I didn't recognize, or at least recognize as important. It's probably because it wasn't off of. I didn't identify a level here, right? Like if I was gonna identify a level, the level would be based off of here, and then we get exhaustion. Ooh, oh man, hold on. Yeah, I just completed. I completely missed it. At the end of the day, one thing that I could have done in my analysis as far as setting these levels and giving it more importance, for this exhaustion more importance, setting my daily level at this high, looking to the left and seeing that there's failure at that level here, and respecting below the level as well. Now, would that have told me, hey, continue to look for sales? Possibly. Not completely sure of what I was thinking during that time, so I can't for sure say, hey, I wouldn't have taken the buy in this situation. But what I was looking at for the buy, like I said, inverted head and shoulders, looking for a retest of this area. I labeled this as a JCP single leg, and got a test here with exhaustion at that level at 48.76. After that, I went ahead and entered the position, looked for price to scale up to the top of that, top of the pattern. Now here, I was actually planning on closing this. Whoa, was this that trade? No, I'm getting my trades mixed up, so I'm just gonna read instead of like say anything. Failure to clear H1 level FTA has potential of being exit early signal. Reviewing winners to see how these levels are initially dealt with. That's just what we talked about. Noticing your action off of. Okay, so something here. I do remember while I was holding this position, I was actually sitting at the chart watching this. Price moved aggressively through that level, right? Aggressively through that level. While this candle was still open, and I had gained some confidence once price just exploded through there, and I was like, okay, looks like we may get a close through here, and we may strike that out. Okay, and I did. I don't remember. I do not remember. But on the failure of this, I do remember that I was thinking of, hey, maybe I should close here or exit or do something, because like that rejection after that strong aggressive move up was just like, okay, we're probably not going to break through that level because we have two failures here now. So that was pretty much it. Now I just don't completely remember what I was thinking while holding this position initially. Okay, your AD. Alright, same setup. I started to convince myself I had the wrong stop and treated this position as an inverse, looking at thrust candle. This was a JCP, not an inverse. Don't combine different set of management methods. I cut it early. I cut early after realizing it was clearly breaking down. 53 minutes later, near close the next candle. This was just a terrible, terrible trade. So JCP setup, I'll talk about how I placed my stops now just below this low, and after price failed, and after I cut this trade, I was like, we got rejection again, which we'll see in a second. I was like, we got rejection of this level again, right? Not significant rejection, but rejection. And I was like, okay, what if I enter here again? Where would I place my stop if I entered? Yeah, I'm pissed. That's terrible. Okay, I placed my stop below this candle, which for one, off JCP setups, I'm placing them off the lows. I'm not placing them off the thrust candles. Thrust candles are based off of inverse plays. If there's more, if I need to expand the stop, it's not really a JCP for me. because there's certain things I'm looking for, right? And that's just wow. Okay. Mm, yeah. So the full review wasn't taking place here because the full review was done here. It's the exact same trade. It's just trying to fight back, pretty much. Okay, AUD Awesome idea to sell this opportunity. Inverse trade of weekly level, more specific at the weekly level. Planned on DP on the 12th. Close after price close. Close after the price closed through an entry level instead of reacting off of it. A reaction came later in the day, but was not in an area of interest for me. I shifted from my original limit at 0.6799 to preempt the liquidity pool. Once price broke the liquidity pool, 0.6761, I began to think that the weekly level 0.6761 was very strong, and I'd rather be in the trade than to miss it by trying to be exact. I do remember this very well. Not hold true to my original. Okay, yeah, I remember this very well. So this week, was it this week? It was either this week or the week before. We were closing. I was noticing we were closing through a lot of weekly levels, and my original idea for Aussie dollar was to look for price to break through the liquidity pool, and while price was above here, and I was looking to preempt the level. So I was looking for a round of retest before price broke down through this weekly level to sell down potentially to actually just straight to the weekly level. Once price ended up hitting the weekly level, I canceled that limit and shifted my limit to the weekly level, to be more exact, because I view this as a very strong level, and we might not get a retracement all the way up to my last low pre-break, which is this level here. So overall idea I love, and in this situation, like, everything's great, but one thing that I could change to make this trade a lot better is if I'm going to enter at such a strong level and I have doubt of price actually scaling up to my prime entry level, I should place my stop as if my entry was at that entry level, placing it above this candle here, right, which would reduce the R, but that's what makes sense, leaving room for the possibility for price to continue to scale up to that level and retrace, right? I just get an earlier entry, just more confidence in that if this setup plays out, I'm in the trade. Like, I want to be in the trade. Reason I cut this was because on this candle, like, that's not the candle I want to see on that limit, right? That is not the candle I want to see on that limit. And that's why I cut it so early. I literally cut it just on the close. With that, I completely forgot about this position up here, right? If that's not the reaction I want there, I need to be placing my limit. I need to be placing another limit here, right? If I'm willing to cut that early, as soon as I get that reaction there, I need to be placing my limit up here, right? I need to put that limit back on and put that trade back on to be in here. But that wasn't that. But I didn't do that. I just forgot about the position up here and shifted my focus to another pair. So this was the position as far as like where it's planned. I know I have the plan somewhere. Oh, it says it's planned on the 12th. So like going to the 12th, and I didn't find the missed trade. Like, that's just links to the date that I planned it in the section, or the screenshots that they're where they are. But yeah, this is the type of price movement that I want to see at my entry levels. And that's the entry. Was that the actual entry? You know what? Just to be sure. Oh yeah, I see. Yeah, that's right. That was the planned entry. Okay, so this was the hourly level again for the preempt. the hour level, and the last low pre-break is this level. So before price broke through this weekly level and took out the liquidity pool, I was looking for price to come test this area and continue to push down. All right, so that's valid. That's right. I just wanted to be sure that wasn't. I just placed that this wow. I just placed this example here because that was the exact area that was like the perfect scenario. I want to ensure that I actually planned that instead of making false notes. Euro USD. Man, I just like these. Like every single trade this week, I lost, but I'm real proud that like I actually intentionally came back and like studied them in this depth. This even though they're losers, because like noticing what I can actually do better in these situations is very, very good, very, very helpful. I really like this. So euro dollar. The play's a descending channel. This was a limit trade. At the time of placing my position, my channel was not as precise as it is in the below screenshot. I need to have clear definitions of where I start and end my channel parameters to avoid false trades. I cut the trade during morning review and I noticed I didn't give the reaction I'm looking for off the DC plays, or get the reaction, right? So again, channel's one of the best setups that I have this year, and I've been getting eager to trade them when I notice them, right? And jumping the gun. So in this situation, I actually ended up jumping the gun. Do I remember exactly? No, it was a limit order for overnight. Yeah. So while I was doing my another report card, I noticed that we had broken through the channel. I was looking for a round retest of this last high pre-break, and for price to continue up to the top of the channel. And yeah, we'll stop there at that breakdown. But something of interest, something of like that's really, really cool, right? After this trade, after taking this loss in the morning, I started to notice, hey, we got equal highs here or equal lows here, and I reviewed my other channels to say, do we get this same price movement before we're breakout? And yes, on a majority of the channels, I've noticed that we get equal lows, and then price breaks through that level, gives some type of exhaustion, or just vertically turns around, kind of like a V shape, after breaking these levels, and then it breaks out and continues an uptrend, or it continues to the top of the channel. At least on the ones that I've reviewed, on the ones that I've taken, right? So that was really, really, when I saw that, I was really excited. I was really excited because that basically gives me a premise or something to look for before taking these type of opportunities, or being willing to place a limit order in. Right now, of course, I'm sure not always, and also like in my test on AU, I'm already seeing this doesn't always happen on these setups. Like some setups I will miss if I wait for this exact price movement, but this could be a different variation of this setup. What I mean by that, a certain nuance of the setup, right? So there may be a channel play, and it gives me a breakout, and it gives me my round of retest, and that may play out. But on that setup, I may, like, let's say I'm tiering the setups, I may not be as willing to put my full clip on, and I may reduce my risk, right? Whereas if I wait for this break below this low and I get this exhaustion that I'm looking for, and then I get the round of retest, then I would put my full clip on for this type of setup, especially if it's an A+. Like that would make it the A+ setup. Let's say, for example, this setup is an A for me, and that nuance of the setup is an A+ for me, right? That's really dope to me. I think that's really cool. Is that this the last trade? Yeah, that's the last trade. So yeah, I went back. I went ahead and gathered those screenshots and like made new notes on them, and it was really fun. Honestly, um, it was really fun. But that was the week. Hope you guys enjoyed. Uh, and I will catch you guys in the next one.